Eric, talk a little bit about the opportunity here, but also we talked about this yesterday, sort of the balance that Apple has to strike because it's doing all of these things, done all of these things in the name of privacy. And now it wants to grow its own ad business. Kind of feels like it's coming at the expense of others.
Julia, thanks for having me on. No, you're right. Apple does have to walk a fine line here, but what we ultimately know is, Apple leads with hardware. Vertically integrated hardware is where Apple does best, but it's found ways to monetize its installed base. And this is just another way for Apple to do so. They've had their App Store search ads business for a number of years now. It's in 60 different countries. It's obviously growing quite rapidly. And they obviously see the opportunity, or potentially see the opportunity, to do more in the ad space. And so you're right, they do have to walk a fine line, but Apple has walked a fine line in other end markets before, and I'm sure they'll find a way to do it this time again as well.
It feels like the whole market is saying that, Eric. I'm sure they'll find a way to do this yet again. Meanwhile, as we've talked about, it's 5% off its all-time high. It's making up a bigger percentage of the S&P, now more than 7%. It is such an important leader. What are the risks here? It comes at a time when App Store growth is decelerating. Why does the market kind of think that Apple can just keep chugging along? What are the chances, and what are some of the biggest risk factors in your mind?
No, you're right. It's a great point. I think we are seeing a period of time now where we're coming off of the pandemic, and some spending trends are normalizing. App Store is one of them. Something that I'd just point out, now that we're kind of most of the way through earnings season, is if I look at consensus estimate revisions for Apple post-earnings, they're relatively unchanged. For the rest of my consumer hardware universe, revenue estimates for calendar 23 are down about 8%. Profitability is down about 14%. So what we're seeing is that Apple has more staples-like products. The iPhone is obviously the key there, and that in the current spending environment, users are still spending on Apple. It's this platform that attracts so many of us, 1.1 billion of us. But again, it's not to say there aren't risks. The macro is still a risk. High-end consumer spending is still a risk. It's something we need to be cognizant of. But Apple is clearly better positioned, again, with more staples-like devices in this type of spending environment, which arguably is still a challenge.
Yeah, I mean, looking at those devices, that's one piece of the puzzle, but the other is services. What's your outlook for services revenue growth, considering all the macro factors as well?
So I have services revenue growing, call it low double digits in Apple's fiscal 22, about let's call it mid-teens in 2023. And you have to remember, there's a lot of different businesses underlying Apple's services business. App Store is just one that gets a lot of the publicity, but Apple TV is doing fantastic. Apple Music is still kind of a key streaming service. Apple Pay we're all using increasingly in the world today. And so it's not to say that it's risk-free. We do have to continue to watch it, and my team tracks App Store spending effectively weekly. But Apple is very diversified in its services business. And right now, we are seeing some slowdown in App Store spending, but the rest of the services business is trying to help pick up the slack to keep that running, call it double digits with a low 70% gross margin.